Hey everybody, happy Monday. It's Labor Day, but doesn't mean that I'm not taking a look at what's going on with the markets. So welcome to Charts and Coffee for Monday. Usually on a holiday, I'll spend the first couple hours in the office, just kind of going through what I would do on any other Monday. And just today, I do have some Forex positions open, so clearly those are markets that would be open. We've been looking at different levels in the Euro US, so that's something I've been watching. We've been looking at different levels in Aussie US, different shorts that are setting up as the dollar continues to be really strong. So those are things I'll look at on a Monday, and then I'm going to continue to fine tune the watch list that we've been focused on in terms of handling this fall trading season that's coming up. So thanks as always. Yeah, I'll always. I think we even did. I think the only day I took off might have been Christmas and New Year's. So usually we like to do these charts and coffees even when the markets are closed, because the markets are a great big thing, and there is going to be risk appetite in different parts of the world, and we're going to end up dealing with that as we start off Tuesday in this shortened week. So let's get to it. All right. So kicking off the questions. And is it okay? Hey there, James. Good morning. Is it okay to add positions that are still in the entry zone after taking profits on other winners? So basically, you're talking about what I would basically call, refiring the same trade. So we got in, hit a target, and the market pulled back to the same zone. So normally, I will try to look at the trade after the first target is hit as a brand new one. In other words, I'll make it earn its way back into my watch list, into a setup, and eventually into my trading book. I'll make it earn its way back in. Meaning, has anything changed? Do you have a particular symbol in mind, James? Let me know what it is, and I'll be happy to jump in. But the answer generally is, as long as nothing has structurally changed, the answer is yes. I don't have a problem doing that. I will just make sure that the zone hasn't ratcheted up a little bit lower, or I'll make sure that we don't have an uptrend that segued into chop. So maybe I'm looking more at a conservative level to re-enter, those kinds of things. And I'll also look at whether there are new events on the economic calendar that could create volatility. So I'll sort of look at it with fresh eyes. But of course, we know that if everything is still structured in a way that makes it a viable symbol and potentially a viable setup, yeah, I'll do it. I don't have a problem with that at all. So thanks for the question. Next up is Jan asked, could I give a quick tutorial on point of control looking at the daily chart of gold? Sure. Basically, where the struggle is with the buyers and sellers. Sure. So, okay, quick tutorial. And by the way, speaking of tutorials, speaking of things we're doing this Friday, if you all haven't already checked it out, we've got the first of two sessions of live trading with the indicator bundle, and this is definitely going to be one of the topics. But yeah, let's jump into it. So first of all, step one is, what's the look back on the volume study that you're doing? We want to anchor all volume studies. Most volume studies sort of exist in this rolling way. What does that mean? What's the problem with that? The problem is I'm just looking arbitrarily at volume rather than from a certain point on the calendar forward. So in this case, we could just look at the very first of the year, and we know that from the first of the year, the point of control is down around 1780. Now, if we say zoom into from May forward, it's still around 1780. We zoom in a little bit more, see, depending on where we are in the structure of the market, it's going to be different, right? In other words, if we have less time, here I'm anchored to July. If there's less time, you'll notice the point of control is in fact different. All right, so keeping that in mind, you want to look at all the different look backs. That's what it's called. Where have you anchored it? Where are you looking back to, and then coming forward? And then the point of control, for those of you that may not know the lingo, right? The technobabble. What is that, right? What is point of control? It just happens to be the level that we see the most volume at. But since when, right? In what window are we talking about the most volume? So, we're still talking about 1780. Uh, I mean, you can take a look. It doesn't really change all that much. And until you get into a zoomed in look at about mid July to current, that's when it moves up to, as you can see here, around 1815, that area. So when you really start to zoom in and the look back as far is it's much more truncated, you'll see that point of control ratchets up. And what I'm showing you right now is what's known as a visible range or variable range volume profile versus having to anchor at a specific date. This is just handy. I know that whatever is on the whatever's in the view of the chart is where it's being anchored. Okay, so thanks for the question. Good morning. Good morning. All right. So next up is, hey there, Kim. My pleasure. I'm here in the office in the morning. My baby sister's in town for her birthday, and our birthdays are only 2 weeks apart, so it's kind of cool. September is just the month of birthdays, which is great. And then I tease her and I say, look, the whole month would be mine, except for the point that she was born mid-month. So the second half of the month is hers. The first half of the month, so we have total sister shenanigans um, going on this month. So, I'm going to spend just a couple hours here in the office. And then I might shop some Labor Day sales. I found a couple really um, cool people that make stuff on Etsy, and everyone's having Labor Day sales. We're having a Labor Day sale, by the way, over at Simpler. So if you haven't got the email or checked it out, there's a bunch of stuff on sale. I always try to let you all know, hey, if you can wait for a sale and pick up some of the indicators or courses or whatnot, definitely take advantage of it. We had a great Memorial Day sale and we have a really good Labor Day sale. I'm going to go shopping probably after this. So that's what we do. Little watch list building and then a little bit of shopping. So, in terms of charts and coffee, I know markets close Monday. Doesn't mean there's still not things that we can do to get ready for the upcoming week. And by the way, from a directional bias standpoint, I'm still quite bullish. I know the markets have been very compressed, but I think that was really in response to the window between gross domestic product, GDP, the PCE, and then non-farm payroll, NFP. And then now the Federal Reserve can start to clarify the message. And if they are going to start hiking, starting with the November meeting, they've got now the rest of September and into October to start to clarify that message and really set a very, I think what's going to be a very slow and measured pace to reduce taper, but not automatically lead the market to expectations of rate hikes. So we're in a really interesting part of the month now with those three big data points behind us, and we can go, work forward from there. Hardest working. I think The Rock actually owns that, but I don't know. Thanks, though, Win. I appreciate that. It's not work when you love it. It's not work when you get to share time and space with people that you enjoy. And that's what the mastery is really for me. I get to go hang out with people that if you all were local, we'd be, at a local, breakfast place, having some empanadas and maybe some coffee and looking at the markets together, right? So it's good stuff. All right. Accumulating SKIN. All right, let's take a look. SKIN. All right. So if you're in it already, so Kim asks, it's got good momentum. Where should I set a target price? So first of all, if these are brand new highs, as clearly these are, now we're in blue sky. We don't have previous peaks to rely on to say, oh, okay, we've stopped at this level before and we'll probably stop at it again. So I would say I would keep a very close eye on any number that ends in 0, 20, 30, 40, 50. There's always a psychology of numbers. The other thing you can do if it's something that's in your toolkit, is project a Fibonacci. Uh, at this point, what I like to do is not guess at where the markets are going to stop, but rather than looking at a finish line, in other words, something the market's got to cross, what I'll do is I'll put a safety net underneath it, not knowing necessarily how much longer and this is parabolic. I don't need to know a lot about skin to look at the distance between current price and the wave to say that this is parabolic. But I could treat this as a parabolic market and then just put a safety net underneath it. Maybe it's maybe you could take the last 4 days of lows, not including the current active candle, and figure out what the average low is. You could look at an 8 EMA. You can look at an anchored VWAP. Anchor a VWAP to the first of the month. Anchor a VWAP with a 10-day rolling. Just get some feel. Look at some volume ledges. Look at some previous volume ledges and say, look, we might stop around 25 to 24.50. There's another area around 23.40. So look at some of the previous volume ledges and say, if this market were to pull back, where would it gain traction? And I don't want to put a trailing stop necessarily for fear of smothering this market moving higher. I don't want to smother this strength. I want to give it some room to move, but not so much that I'm either risking going negative on the trade or that I'm risking, most, if not all, of my unrealized profit. But I think the first criteria, don't go negative on the trade, is probably the most important. We have to risk some percentage of unrealized profit. That's something that all trend traders, I'm talking really diehard trend trading mindset traders, accept that there is a certain percentage of the unrealized profit that's got to be risked. So I hope that makes sense. So thanks for the question, Kim. I appreciate it. James, I took profits on Johnson & Johnson. Cool. That's in line with that XLV sector that we love. So my budget has now increased. I love it. So I love the way you're thinking. That's all, by the way, for those of you who don't know, that's all sector secrets, mastery lingo, budget, affordability. How much are you spending on each trade? What is the budget? And therefore, once you know your budget, how much of that spend are you risking? We never risk full debit in the sector secrets mastery, or really, I don't do it ever. It doesn't make any sense when you think about the lifespan of a depreciating asset like an option. You have theta decay, which makes 0 sense. Theta decay alone would make it make 0 sense to risk full debit. The other reason is, what is the probability? And you can study your trades. I've studied hundreds, if not thousands of them at this point, and ask yourself, how often did I really come back from a down 50%? Or is it a cognitive bias where I'm giving disproportionate weighting in my mind and memory to one of those great comebacks, ninth inning comebacks, and I'm expecting things that are very low probability. So, these are things we think about in terms of risk and position sizing. And position sizing is absolutely related to the budget conversation. So after running the market money math, I have room to, well, we know how much, I hate the word add, right? But we can start to look for more positions like DUK. The only way DUK is going to be actionable again is if it re-enters the zone, kind of going back to the earlier question that you had, which I love. Yes, if DUK is still in the zone, bearish momentum, go for it. But remember, DUK is kind of being laggy. So what I would say, James, is we're going to rebuild the watch list this week. There's no doubt there'll be some more things that are going to end up on the radar. So rather than looking at things that were interesting to us last week or even the week before you jump into those and spend that valuable budget, let's I'll be with you all Wednesday for our typical for our weekly Q&A. And what are we going to do? We're going to start to look at how we can rebuild that watch list and re-enter new trades. So before we just kind of zero in on DUK, what I would say is, and that's what I'll be doing on a Monday morning like this, let's broaden the view. Let's broaden the scan to see what else might be in play. And if DUK still is up near the top of the list, once you've done that kind of scan. Okay, so I hope that makes sense. And thank you for the question. All right, next up is, yes, By the way, we do have the sale going on, simplertrading.com, Raghee-workspace-bundle. So yeah, so we sign up for the bundle. Tim, I love it. And live trading. What should we study first and second to get up to speed on the indicators? So Tim, I've been working, actually, you can see a little bit of it here. I've been working pretty hardcore on the notes and the ideas for Friday and Monday's live trading session. So you don't have to do anything. In some ways, coming in with sort of a nice blank sheet of paper, quite literally and figuratively, will be the best way to go. We'll go over the settings. We'll go over what the indicators are measuring. We'll go over what the colors mean. We'll go over the anchors that we talked about earlier. We'll do all that. We'll build all that stuff up. And in that, what if you want to do some homework, and this is for anybody who's taking the live sessions with me that are coming with the bundle, is think about a list this week. Yeah, think about names that you might want to run through the process, because it's the process that's the most valuable. Yes, the tools facilitate the process and add a huge degree of objectivity because everything is automated, really. But think about the names you want to scan. And what we're going to do in live trading is I'm going to show you my list. We're going to go through the process, and I want to see your list. We can go through the process and just crunch the symbols and ultimately have some cool trades that we find with the indicators. So we'll spend some time setting up the indicators, not tech wise, because you have the tech session that came with the bundle. But what I mean is setting up the indicators so visually it's a dashboard that's giving you information without you having to subjectively or manually do anything. You know what the colors mean. You know what the JT multi is telling you. You know what the propulsion dots are telling you, etc. So we'll definitely be doing that. So maybe, I would say start looking at your portfolio of trades right now. Start taking at your own, take a look at your own watch list and bring that, because we're just going to keep running the process over and over and over again until it becomes second nature. And some of you probably heard that old saying. It's been credited to Bruce Lee. Sounds like something he would say, which is, don't fear the person who knows 10,000 moves. Fear the person who knows a move and has done it 10,000 times. So it's not having width, breadth. It's about having depth. And the way we'll do that, and the way we'll make this more comfortable and you'll be more confident, is we'll just drill it and drill it and drill it. So bring the watch list is what I would say. And we'll go through all that good stuff. Prabish asks, do I use the V-score for trend pullback setups? The V-score is an oscillator, right? If we just get in, we'll cover all this on Friday and Monday. The V-score is an oscillator. That is absolutely true. And you can use it for pullbacks, but it's not going to give you pullbacks as frequently as, say, other oscillators like an RSI or a slow stochastic. It's not going to give you that. And I like to know what the V-score is saying about the general, I call them hemispheres, right? Are we in the bullish hemisphere in the market or bearish hemisphere in the market? So that will help there too. But for choppy markets, is it only choppy market? No. Here's why the V-score is, in any volume tool, not just my volume tools, but any volume tool, is an exception to choppy versus trending market analysis. V-score, VWAP, volume, profiles and ledges, points of control, their validity exists outside of the price-based understanding of up and down trends and chop. In other words, they're not subjected to the same type of rigors of whether or not an indicator or a level is valid based on uptrends, downtrends, etc. The reason for that is they're not rooted in price. They're rooted in volume. Volume is something that isn't as susceptible to, I believe, in my experiences, I don't believe volume is as susceptible to the nuances in the trend as price itself is. So, but we still need the environment. We still need the overall trend. We still need the grab candles in JT Multi to understand, what do I do with this level? Okay, I've got a volume ledge. Is it support or resistance? Am I looking for support and bounce? Am I looking for a breakout? Am I looking for a stall and rejection? That's still environmental. But volume tools, not just mine, all volume tools sort of exist apart from the typical price-based tools So, uh, we can use them regardless of whether it's distribution or a markdown. So, yes, I do. Pullbacks are fine for it, but that's not all it can do. It can give me an idea of whether, like, for example, I have XLU right here. XLU bounced off the mean one, two, three, almost four times. That one's a little aggro, but definitely three times. The mean is going to be a level to watch for sure. So as long as we're above the mean, and the mean is not always that line in the sand, it just happens to be for XLU. As long as we're above the mean, there's a certain amount of bullish opinion that I can have. Notice with XLP, it's the first standard deviation. That's an important level that we want to see above. So it's not just pullback buys at the first standard deviation for XLP or pullback buys for the mean on XLU. It's also, we're above those key important levels. And that's, look, indicators are only as good as your ability to understand how to use them, how to read them, how to anchor them, right? The indicator itself is akin to my husband's set of tools in the garage. I don't know what to do with 90% of them. And so it's same thing with indicators. You can go download and grab indicators from wherever on the worldwide interweb, but unless you know what to do with them, it's like the garage of tools where I look, what do I do with this thing? Right? So that's the way I look at that. And choppy, it works, absolutely, but it's really more than that. I hope that makes sense, Pravish. Euro yen. Hey there, Shaw. Euro yen. So when I look at the euro yen, actually, let's look at euro yen. Let me pull it up one more time. There we go. So euro yen is, yes, it's actually created a wave reversal is what it's looking like. Is it possible for a Dow 123? What I love to see, if I get a Dow 123, what I want to see is that it happens something like this, right? But what we have with this is just a straight up wave reversal. We've been heading lower, and we've just taken out the level in there, right? That's what's happened. So that's just a wave reversal. So this is the wave. We've gone yellow on the JT multi, and that would confirm a reversal. What I like to see is the Dow 123 coupled with my wave reversal. And we don't have that. We just have the wave reversal. So yeah, it would be buyable in momentum. It will also be buyable in pullback. So maybe pull a Fibonacci on, here's what you could do. Pull a Fibonacci. Oops, let me grab the right drawing tool here. All right, pull a Fibo on, I would say, yeah, but look for a 382 to 50% pullback. So that's going to put you around 129.65 to 129.30. Look for a little bit of a pullback. You can go as shallow as, the I don't know that I want you going as shallow as the 23, 22, but you could. 38.2 might be, the 38.2% Fibonacci might be as aggressive as I would recommend. But yeah, you're looking for a buy. You're looking for a buy. You bet. All right. So I hope that makes sense. I have a Nadex account, Mustang, and I've played around with it. I do most of that with auto charts. It's a completely different kind of trading. It's very much time-based and volatility-based. And so auto charts is a really cool tool for that. For me, I haven't done extensive Nadex trades. If I put on 60 or 70 trades using that whole time-based option, it's probably a lot. So I can't say it's a great sample size, but I do know enough to say it's completely separate from most of what I do. And it's very much oriented in the time-based historical volatility world. And then, all right, wrapping up our charts and coffee with XLRE. Thoughts on XLRE? It's strong, Deborah. I mean, double green. Let's get a pullback. I mean, we want to look at markets like this back in here and back in here, right? I can't do anything up here right now, but definitely keep it on the watch list. Yeah, no doubt. Keep it on the watch list. for sure. And with that, gang, go spend some time with friends and family. I'm going to spend the next hour or so finishing my coffee, and then I'm going to go hang out with the family and probably check out some Labor Day sales. I've got it queued up on my other monitor here. I'm like, ooh, I don't need that, but need is such a funny word. Check out the Labor Day sale over at Simpler Trading. I'm looking forward to seeing you all on Friday for day one of our bundle, our indicator bundle live session. If you haven't checked it out, simplertrading.com/Raghee workspace bundle. And if there's a course that you've been looking at or indicator you've been looking at over at Simpler, check it out to see if it's on sale. I'd love for y'all to take advantage of that while we're knocking some of the percentage off the price, the regular price off. And then on the other hand, remember, we do have this shortened week. We have those major data points behind us. Fall trading season's here, gang. And let's factor in the taper. Let's factor in the uptrends that we see in these markets. And keep in mind that pullback buys are still working. When will they stop working? Well, let's wait for the uptrend to turn into chop before we start panicking about potential downside. Don't worry about picking a top right now. The far more profitable side of this trade, as many of you in the market mastery, the sector secrets mastery know, have been the dips. We continue to buy dips. And I'm working up some of the examples for an upcoming webinar. That's something Trish and I are working on, and we've worked in a number of very cool losses to show you that when we're wrong about a trend, what's it cost us? What's it cost us? How do we manage trends and losses? How do we manage to not let a loss turn into more than just a paper cut? So there's some cool things coming up. All right. Anyways, let me wrap it up here. Have a wonderful, wonderful day. Thank you for being part of the Simpler community. Thank you for your time as always. And I'll see you tomorrow. Same time, same station for the Tuesday charts and coffee. All right, gang. Be good to each other.